Hey, everybody. Welcome back to the Return Podcast. I'm Marvin. We got Will with us today. And as always, we're going to be talking about something that every investor should keep in mind. And today we're talking about diversification. Now, we're talking about beyond stocks and beyond bonds. And yes, we're talking about even beyond equities. So we're going to be referencing a couple articles today, a couple key highlights, all that to come. But we're going to focus on diversification and we're going to talk to investors about how they can broaden their horizons for better returns.
Absolutely. So something that happened recently, I think we all saw, was that the stock market essentially plunged the other day, and even when stocks rally, sectors can fall or rotate really fast. Diversification is going to be important coming up in the future. Our last episode, we talked about how BlackRock is telling a lot of people to go into alternatives, and there's a reason why that is happening because the stock market can be volatile. And this is the reason why diversification matters because it reduces the risk involved with investment. Now, there's still quite a bit of risk when it comes to it, but it reduces that amount. So, what if part of your portfolio moved from on a different rhyme than in rhythm than Wall Street? That's what we're talking about today.
Yeah, most definitely will. Really quickly, I spoke with a friend last month, and he's a pretty savvy investor. Anyway, he built this pretty solid equity portfolio. Then we had a conversation about alternative investments, and not too long ago, he put some of his money into a crowdfunding finance real estate project. And it's been early, so the returns haven't been crazy or anything. But it's like he doesn't move lock and step with the S&P or tech stocks, and he's enjoying like the differences that his portfolio is generating a different lane and different exposure to different assets.
Absolutely. I mean, even strong companies face volatility. Macro cycles, valuation risk, even risk when it comes to policy, right? We saw that again this week with some announcements from China and how quickly on Friday it dropped the market. And so, with all
Right.
these things being the case, it's very smart for investors to look beyond the public markets into, again, alternative investments. And that's really what we're talking about today.
Right. So that's actually pretty interesting. So you could say we do love traditional stocks. I want everybody out there to get around. We're not saying to move away from traditional real estate and traditional securities, but we don't want to get into the habit in anything of putting all our eggs into one basket. So that's kind of the premises of alternative investing. So, we got to always keep in mind that alternative investments are not real. They're not a replacement for equities or anything other than that, but they do complement and they can have some surprisingly good returns.
Yeah, I mean, when it comes to complementing, right, you can frame it as an opportunity. So you're not escaping the risk, but you're redistributing the risk across different engines. So if one flops, the other one is doing okay. And no matter what happens in the market, there are always going to be winners and losers, right? Typically, even if a market goes down, you'll have this bounce back of particular stocks or particular equities that will come right back right away because of whatever may be the inverse of what has happened. The same thing when it comes to alternative investments. And what we mean by that is that you may be heavily into technology over in this area when it comes to healthcare, but then you want to also diversify your alternative investments and have some when it comes to prop tech, right? Or some when
Hmm.
it comes to defense, or some when it comes to agriculture. All these things combined will give you the ability to be able to redistribute that risk across a few sectors, and in that way, you can kind of weather the storm. And this is what the millionaires and the billionaires do, right? They don't put all their eggs typically in one basket. They distribute it. One market is going down, the other market is going up. But typically they're all going up. It's just the ups and downs that they're able to ebb and flow, right? Because they have a diversification.
Well said. Well said. So there's a lot to unpack here because I know everybody's on a different investment level, but why alternative investments matter in a nutshell is we're going to fully flush out. And then also how crowdfunding platforms enable access and help bridge the gap. Some key points though when we're talking about investment, alternative investments matter. You got to think about low correlation, so it helps reduce portfolio volatility. You can talk about return potential, higher upsides, income sources, rents, private dividends, assets, inflation hedges, tangible assets, these sort of things. There are trade-offs which we can talk about too, and includes less liquidity, longer lifetime, higher due diligence needs. But as you can see, as you start to look at these alternative investments, there's a lot of upside. What do you think, Will?
Yeah, so one of the things that, again, we're going to, because we have an up and coming crowdfunding platform called Karuti, we're always going to be gearing people towards that. So one of the things that happens with crowdfunding, and a lot of us don't always think of crowdfunding as a way, but that's what we're trying to adjust. We're trying to adjust people's thinking to think that crowdfunding can absolutely be a source of funding both your company, but then also investing into the potential upstarts that are out there who are going to be the future. So alternatives were only for accredited investors back in the day. It really didn't allow everyday people to be able to do this. But I want to bring back to the point that back in 2016, SEC and FINRA released the ability for what is called regulation crowdfunding, or Reg CF is what you will see a lot of times. Also, it was Reg A and Reg D. This completely democratized the access when it came to investors. No longer did you have to be an accredited investor, and just to be clear, an accredited investor, you can look it up on the SEC, but essentially is someone who, if they're single, makes about $200,000 a year. If they are a couple, they make about $250,000 to $300,000 a year. Somebody who owns $1 million in real estate outside of their primary residence, so your primary residence doesn't count. And then there's other people who are like venture funds, people who are security advisors, those type of things who also fall in line. So those were accreditors. Those were the only people who were able to invest directly into companies back in the day. But in 2016, the SEC and FINRA said, look, we want to open this up to everybody. We want to open this up to the retail investors. There's an opportunity here. And so they let everyday people come in and go ahead and start investing in these companies, but with a platform and with guardrails to ensure that people weren't getting taken advantage of. So particularly Regulation CF, democratized access, and now it went from $1 million to now in 2021, it's now $5 million that companies can raise. $5 million with a startup or $5 million with a small company can be a lot of money to take that company from zero to hero. And we need that gap. We need that gap filled there.
Man, that's awesome, man. I wish there was a company or platform that could bridge the gap. Oh, wait, thought of one. And that's what we want to talk about. We always want to emphasize, Karuti and Karuti.com. And if it's your first time joining us, Karuti is designed to enable alternative investment projects, real estate, mixed use, agriculture, etc., via digital crowdfunding. And that's going to be found at Karuti.com. But we're going to elaborate more on some of the aspects of Karuti and why it can help support alternative investments and help you make some cash.
So with our upcoming platform under Regulation CF, we're what is called a funding portal or crowdfunding platform or equity crowdfunding platform. Again, remember the difference. There is the Kickstarters, which are rewards based, and then there are equity crowdfunding platforms, which will be Karuti in a day. We are focusing heavily on what is called real estate backed technology companies. So what that means is that we're focusing on companies that have technology, but they are backed by real estate as far as an asset. So that could be anything from a drone company that wants to do drone farming, but they also own the farmland, so they control that vertical, to somebody who has a defense company, right, that they want to be able to build defense items, but then they also own the building, right, that those defense items are manufactured in, to even mixed-use buildings. You have a new software service, or you want to introduce a automated property management. Well, then you use that to go ahead and automate that building with that technology, bridging the gap between technology and real estate. And the multipliers on that is so much more than just real estate alone or just technology alone, because when people combine those things, you can go out and get additional follow-on funding, things like that.
That's excellent. Now, I know a lot of you, and at a point in time, I was thinking the same thing. What does this mean for me? How do I take advantage of these opportunities? How do I get the knowledge to understand some of these investment platforms, especially when we're talking about alternative investing? So, in a nutshell, what is investing in crowdfunding? What are the upside? What does it do for you? As Will highlighted, so you could potentially allocate a small portion of your portfolio to the diverse amounts of businesses, the real estate backed assets that Will described.
How small are we talking about? How much? How little can they do it for?
And see, that's the beautiful part. We're talking about 500. We're talking about 5,000. 500 to $5,000 can get you some real good returns. Now that all that means is when the Jordans come out, you take a day off, all right, or you cut down the Chipotle budget. But yeah, in all seriousness, that barrier of entry, having a lot of money, like Will was describing with accredited investors, that's kind of gone there. You can literally leverage 500 up to 5,000, whatever your risk tolerance is.
I also want to throw in there that there was even going to be some that, and the founders decide these prices, just so we're clear. Founders decide these prices, but they're going to be some as little as $100. You can invest $100 in some of these companies, and go ahead and add them to your portfolio as well. But I'm sorry, Marvin, go ahead.
Yeah, no. Yeah. So small impact, small capital, diverse pool of investments, and that's what's going to lead you to the power of crowdfunding.
Yeah, I mean, we're talking about exit times, right? Typically 1 year before you can go on the secondary market. A lot of times, I just want to be clear though, there is a holding period for about 1 year. So because you invest in it in October does not mean that you can sell off your share in November, right? It's usually a 1 year period of holding before you can go and sell that return. Now, I also want to be clear in the fact that it doesn't always mean that there's going to be a return, but just like investing in the stock market, there may not always be a return. There is a certain amount of risk when it comes to any type of investment. So you will still carry that risk, but with the diversity and with the real estate backed companies that we're going to end up having, we try to gear down those buffers or the risk of investing in purely technology with the with the asset backed companies that we're involved with, particularly in real estate.
Most definitely. And specifically, if you want to explore crowdfunding platforms doing meaningful alternative investments, real estate, agriculture, just like Will said, infrastructure, and a key point is dysphoria-led projects, then please, I implore you to check out Karuti. Now, full disclosure, as Will said, there's regulatory steps still ahead before every opportunity can be listed, but they appear to emphasize transparency, compliance, and trackability. So, it's a good starting point for your education, and it highlights the points we just mentioned: alternative investment, diversify portfolios, and expectations on how you can leverage your returns. What do
Now,
you recommend, Will?
we got a couple examples on Karuti.com, right? So read the offerings, read the material carefully. You won't be able to invest. We have not released anything yet for you to be able to invest, but at least you can see the examples of what we're looking for or what we're going to be offering, right? Keep those in mind. When you're also looking at investments outside of us, do the same thing. Look for things that are going to be asset based or particularly companies that make a product. Technology and software with AI is going to be continue to become cheaper and easier for people to do or manipulate or use. You want companies that are going to use that technology to produce a product, a physical product that people want. I don't care if that physical product is a building. I don't care if it's a little toy or a widget, whatever it is, a shoe, whatever it is. You want companies that are going to produce things or housing, right, or agriculture or healthcare, because those are going to be things that no matter what software you have, those are going to be staples that we need as far as human beings. As long as we got bodies, we're going to need clothes. As long as we got, as long as we sleep, we're going to need a place to stay. So invest in those companies when you're looking at those things, or look at those companies as forms of investment for the future, not just purely technology companies.
Hey, man, that's a great point. And so, on our end, we're going to continue to monitor and give you guys updates on interesting alternative deals, and perhaps do an episode on fully focus on living off offering via a crowdfunding platform. And we're going to always continue to include strategies on risk mitigation, and we're going to do some case studies on things that have worked, because at the end of the day, we're trying to make sure that you maximize your return.
And remember to invest smart, think broadly, stay diversified. And until next time, this is Will and Marver from the Return Podcast. Thanks for joining us.
Be blessed.